I've been seeing the thing about the hash rate, it's such consensus now. I see it in everywhere for people to justify bullishness in Bitcoin. I like to just watch simple supply declining and demand and adoption increasing. I completely agree. But it's just the indicators are right now that if the stock market has a rug pull, Bitcoin is probably going to go down its normal beta versus the stock market, which is 3x or so. If it doesn't, that's great. Then you'll have that divergent strength. And if we don't have that rug pull, which would be very unusual, Bitcoin's going to outperform anyhow. But
senior macro strategist at Bloomberg Intelligence Mike McGlone recently highlighted the downward trajectory of Bitcoin, emphasizing the risks associated with its current price level. Bitcoin, the benchmark cryptocurrency, is facing potential reversion risks as it struggles to maintain its upward trajectory. Bloomberg analyst Mike McGlone warns Bitcoin and other crypto assets could crash if this happens. McGlone throws cold water on the idea that Bitcoin can be a risk-off asset like gold under the current financial conditions. He says not until Bitcoin shows a larger divergence from equities will he believe Bitcoin is a risk-off asset. Mike McGlone is warning that Bitcoin has a chance of plummeting to prices not seen since 2020. $7,000 Bitcoin? Bloomberg analyst warns that Bitcoin could wreck everyone before next move up. In his tweet, McGlone highlighted, "Don't fight the Fed and rollover risks." Bitcoin is down about 40% since the start of 2022 in the Fed's tightening cycle, and its reversion process may not be done, with implications for risk assets. Risk a catastrophic crash for Bitcoin, according to Bloomberg Analyst. According to the macro analyst, most altcoins will likely witness a severe correction following a drop in the stock market, with Bitcoin printing a new bear market bottom. Therefore, if the stock market remains stable, I don't anticipate Bitcoin to surpass other investments. This presents a situation where there could be a positive outcome regardless of the stock market's performance. Bitcoin could pace declines for risk assets. If the worst isn't over for risk assets, Bitcoin may lead the way lower. Before proceeding further in this video, make sure to hit the subscribe button below for more recent updates about crypto market.
Gold, definitely a risk-off asset. I'm very bullish gold. And at some point, Bitcoin. The problem I have with is all risk assets went down last year. All risk assets went up this year. We've only seen little inklings of Bitcoin showing that divergent strength. Little inkling. You got to see the big one. You got to see that S&P 500 really drop 20%, maybe go down to 3,000, like foul copper, and Bitcoin not to make a new low. Yeah, that would be great. I think it's more likely to do that, screw everybody, and then go back up. So let's look at the facts of Bitcoin. Right before that massive liquidity pump in 2020, Bitcoin in 2019, the average price was $7,000. Okay, so it bumps to 50, to 60, and now we're 27,000. It's still what, 4x that price? We still have a little bit of mean reversion risk, and so the way I look at it, this is the kind of market we're not supposed to be long any risk asset. So let's point out what Bitcoin's always does. It corrects a lot, goes down, and it's higher correlation to the stock market than to gold, and it's still much higher correlation. So, yeah, I get that. And also, it's more of a commodity. Just why is it on the CF? Why is it traded as a commodity future? It's not a stock. I get it. The hash rate and everything matters. Completely get it. But I'm just like pointing out that this is the risk. The key thing I like to point out is the government's telling you to buy US 2 notes, 4.3%. They did at 5%, and it's dropped. It's what you're supposed to do in an environment like this when you have that opportunity. And that's the key problem in the macro economists even pointed it out, is everybody's priced for this ease from the Fed, and the fact is when things go bad, which we all know they're tilting that way, certainly we see the significant deflationary forces. The Fed will not ease until things are really bad, like we give that. I look at it in the macro this is an environment I say, don't touch risk assets, housing. I mean, they all look like they're all going downward, and they've had little bounces, and the Fed's still tightening. So I look at what's the leading indicators? Cryptos, Bitcoin. And then things like Pepe coins, we point out, just examples of the massive speculation that will be purged. It's not an if, and it's being purged right now. So
the Federal Reserve's persistence in tightening measures despite massive bank withdrawals may indicate the central bank's resolve. Falling copper and cryptocurrency prices seem to reflect this warning, in stark contrast to the resilient stock market. It is worth mentioning that Mike McGlone previously put forth the thesis of an upcoming economic storm in mid-April. While being very confident about the future of major cryptocurrencies like Bitcoin and Ether, he suggested getting rid of meme coins. These latter ones are currently riding the wave of popularity. A key shoe to drop for significant deflationary indications from markets. On the back of falling commodities, bank stocks, and U.S. Treasury bond yields could be Bitcoin. Introduced in 2009 and ballooning to about 24,000 cryptos, McGlone has suggested that gold is likely to showcase its dominance and continue to outperform Bitcoin in the coming months at a time the precious metal seeks to attain new highs. Stock markets likely to rally this week on Fed minutes. Caution needed.
What I think is going to happen, risks of predictions, that Mr. Powell is going to go down in history as a person who made the wrong mistakes, who was stuck at the wrong time, the wrong decisions, too much liquidity, and then not taking it away, and then tightening too fast and created the next Great Depression. And that's what we're heading for. That's just based on the facts of where things are heading. The key triggers that's still not dropping is the stock market. But the key thing also I want to point out from our economists, what they pointed out is the future's not bright. I've just made my notes here, and all the models, our economist team says that the Fed will be cutting rate, but bless you, but they don't expect to be cutting rates this year because the lagging measures of inflation, rearview mirror, and also the lesson, I think it's the human nature lesson of the rest of our lifetimes. We're going to hear these every single time things get bad. We're going to hear, okay, no more QE, no more easing too much, because look what happened in 2022 and 20. All that inflation was created was one thing, was a monetary phenomenon because we added too much liquidity. We're never going to do that again. But here's the lose-lose to that scenario. That's exactly right. Writing checks to people, increasing money supply 40% in a couple months. Yeah, that's going to create inflation. You just give people money. But here's the lose-lose to that is now that inflation is somewhat entrenched, it's going to take a while, and it's the Fed's job to take it away. It's just they're taking it that way. So every lesson of history points to this being a severe recession. They're all on the back of massive liquidity. We got the biggest pumping ever. That dumps. We're getting the biggest dump, the highest velocity dump ever. And the key thing that's the lose-lose is we're seeing those lagging inflation measures, like you mentioned. The Fed keeps tightening despite the serious signs that everything's dropping. So to me, that's what the lose-lose is, the inevitability of where Mr. Powell sits in this place in history. There's no way out of it yet, because every time you saw this last week, the stock market popped up again, and interest rates, the probability of the Fed hiking, which right now at the next meeting is about 22%, they're going to go 25. They're still priced for hiking, is because the stock market keeps going up. You see that bait and switch? They're not going to stop until the stock market tells them, and by that time it's too late. They raised too much, and then the repercussions, the long and variable lags, will just getting started. And that's what I'm seeing in commodity. Well, based on my reading of Ben Bernanke's The Courage to Act, the one thing that's going to make them act sooner than things like that, which are lagging and take forever, and they're measures, and sooner than inflation, which is a measure, is risk assets going down hard, and not the commodities, which they are, it's the stock market. So I look at that whole banking situation very similar to commodities. Last year at this time, you could not find a strategist who was bearish commodities except McGlone.
While Bitcoin is booming at the Miami Beach conference, Mike McGlone has made an unpleasant prediction for crypto investors. According to his analysis, the flagship cryptocurrency will suffer a decline. Last August, he suggested that the queen of cryptocurrencies was approaching $100,000, a milestone that has yet to be reached. Can we still trust Mike McGlone when it comes to the fate of Bitcoin? Fat-insured assets like Bitcoin, which are sensitive to swings in the US dollar liquidity, remained bid amid fears of government default and the Federal Reserve's continued rate hikes. US debt deal could weigh on Bitcoin price. The Treasury's efforts to build back cash balances after resolution of the debt limit situation might suck out dollar liquidity from system, pushing Bitcoin lower. Do you agree with Mike McGlone's perspective about Bitcoin and stock market performance? Where does the Bitcoin heading in the coming days? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.